What's going on, everybody? It's your boy C-Zar, and earlier today we did a live stream doing a little watch party on the United States Senate Committee on Finance and the examining of the taxation of digital assets. In that live stream, I was largely just kind of quiet, silent in the background. We were listening, we were all watching together. It was very chill, not nonchalant, nothing, whatever. This video, I'm going to be in your face. I'm going to be telling you every single detail that I think is important, that I think is worth going over. There's probably even some that we won't cover in this video, but damn it, there's a lot. So I don't want to spend too much time in this intro. Hit the like button, subscribe if you want to go over this. What's my experience? What's my opinion worth? I don't know. I've been in crypto since 2015. I've been obsessed with this stuff, not just crypto itself, but the politics of crypto and money and our financial system and all that stuff. I'm a student of the game. I've been doing this for over 10 years now, literally just over 10 years now. And yeah, maybe my opinion has some value to you. If you think it does, hit the like button. If you don't, I don't blame you for leaving. But we're gonna get in this and dissect this stuff right now. Okay, here we are. Let's play this. This is kind of an introduction. These first few clips are some introductions, and then as we get on to the other stuff, it'll be more important. And I think that the ending is just some funny kind of stuff that we're gonna make fun of. Okay, and we're gonna have fun with. So introductions, more important stuff, and then funny, silly goofies at the end, right? All right, so let's get into it here. This is Jason Somensato. He's my favorite out of all these people. I think he's my favorite. He should be the one solely in charge of the taxation legislation. Okay, I'm gonna shut up and just play this here. Hold on. Let's see.
One rooted in clarity, fairness, and the rule of law. So how do we improve the current tax environment around crypto? My written testimony focuses on 3 recommendations that Coin Center has championed for years. Let me briefly explain each. First, the IRS treats cryptocurrency as property. That means every time a user sends crypto, even to buy a coffee or pay a fractional transaction fee, they trigger a complex taxable event. For individual users, this is comparable to triggering a tax obligation every time you send an email or a text message. In 1997, Congress saw a similar issue with foreign currency and created a $200 de minimis exception.
So what he's talking about here is that in crypto, crypto is considered as property, which is actually a good thing. We want it to be considered as property. That's actually a really good thing. It's better that way. There's a lot more flexibility with it legally speaking. But what he's talking about here is that there's an issue because whenever it comes to property and dealing with foreign currencies as property, there's a what's the word that he uses? Hold on, what does he say here? Let me see. What's the word called again?
A comparable foreign currency and created a $200 de minimis exception. A comparable
a de minimis exception. Okay, so that's where you're allowed to spend your property as currency essentially, and you're not deducted on it for taxes. So like with crypto, you could spend a portion of your crypto, like a certain amount. Maybe it's $200 in a transaction. Maybe it's $10,000 a year, or however much a year, or per day, or whatever. You have a limit on what you can spend, and that won't get taxed as income, as capital gains, right? Like if you're using, and why this is important, you guys, is because if you're using Bitcoin or Dogecoin or XRP or whatever crypto you want, USDT, well, I guess not, you wouldn't have gains on USDT, using a crypto as payment, Bitcoin, Ethereum, Solana, you don't want to, by using it as payment, also have that be a double taxable event where whenever you use it as payment, there's a sales tax, a purchasing tax, but also then there's the tax of claiming your untapped gains. Now you have to pay capital gains tax too. This is a way to kind of make it more fair, where if you're using your currency to spend, your cryptocurrency in the United States or any other place to spend, you're not getting taxed double, right? I think it's just sensible. We do the same thing with foreign currencies. Cryptocurrency is not necessarily a foreign currency at all kinds, but it's a different type of currency. It's an evolution in currency, and that's why it's weird. I think as we really get into this video, you'll see that more and more the thing that I think is being recommended is that digital currencies are put in their own kind of category, right? There's like commodities, there's securities, there's digital assets, right? Just a different category of its own. And I think that could be beneficial if they frame it right. Hopefully if they have guys like this framing it right. But let's continue. We're not even getting started here, you guys. It's ridiculous.
For crypto would go a long way toward enabling everyday use without sacrificing compliance. Second, we urge Congress to clarify that block rewards, the newly created tokens earned by miners and stakers for validating transactions be only taxed upon disposition. IRS guidance incorrectly treats these tokens as gross income upon receipt. The reality is that these tokens are not received, but are instead created property, just as crops grown by farmers or apps coded by developers.
I love how he says that, just like crops grown by farmers, right? You don't get taxed. And what he's saying here, for anybody who doesn't understand what he's saying here is that you don't get taxed on the corn that you receive, right? Like if you're a farmer and you're going out and you're reaping what you sow, you're gathering up your crops and you get your ears of corn by the ton, or I don't know how much the average farmer would get for corn. I'm just spitballing here, but you don't get taxed on that corn. That's a product. You received profit in the form of corn, but then you sell that for cash, and that's where you get taxed. Not on the what is the amount of corn that you just inherited. Now you pay tax on that value. No, you pay tax once you sell it. Does that make sense? What he's saying here is that the way that mining is done in crypto or staking or any of that, you're taxed on reception of these funds. Whenever it's really, you should not be taxed until you have sold them. And I don't know if that's quite the way that it's done yet. Again, the taxes are not clear, but I think more so than not, this is about him saying that this is the better way versus the worst way. The worst way would be you tax whenever you receive the mining rewards, the staking rewards, whatever, and you get taxed on the sale of your Bitcoin or Ethereum into US dollars versus just getting taxed on the sale whenever you execute a sell order for US currency. Then that's a taxable event. I think that's key. And I think that's this guy, again, he's sensible. Out of all of them, he's the most sensible. There's another one that's sensible too, but we're gonna get back into this here. Okay, hold on. I'm clicking all kinds of buttons.
The current IRS approach leads to phantom income and misaligns crypto with other taxpayer-created property. Congress should clarify that block rewards are only taxed when sold or exchanged. That change would align the law with economic reality and prevent honest taxpayers from being penalized for participating in network consensus. Third, the 2021 Infrastructure Act extended Section 6050I to crypto. This provision now requires anyone receiving over $10,000 in crypto to collect and report detailed personal information about their counterparty in a peer-to-peer transaction. CoinCenter has challenged the constitutionality of this provision in federal court, and we urge Congress to repeal or amend it to avoid chilling legitimate private uses of this technology.
Yeah, and he said it pretty much right there, man. It's just an invasion of privacy. That's just more ways for them to get access to your information, right? If any transaction, if you receive any kind of crypto through, what was it again? Hold on, let me replay this real quick. Hold on.
For participating in network consensus. Prevent honest taxpayers from being penalized. 21 Infrastructure Act extended Section 6050I to crypto. This provision now requires anyone receiving over $10,000 in crypto to collect.
Yeah, it's just the reception. Anytime that you have $10,000 or more in crypto, you're required to be transparent about what that transaction is for. And it's like it is an invasion of privacy. I get it. We're all good citizens, right? If we're spending $10,000 or more of crypto, who cares? I'm not doing anything wrong. What's the big deal? But they want your information. It's all a part of them getting information to either use against you or use to their own benefit from your spending habits, right? And it's information that they're having access to that they don't have the right to access to. Does that make sense? But anyways, I thought that was a good intro for Mr. Summon Santo here. Probably my favorite one. There's one more. She's my favorite actually, but she's much later. We'll get into that. Okay, Miss Kramer. This one is my least favorite. We're gonna let her play. All right, let her play. She's clearly a plant. Okay, this lady here is clearly a plant. I'm sure that she's smart. I'm sure that she knows what she's doing, but she's just there for the senators to say, so is this what you agree with? Yes. Is this? Yes. Like she has no opinion. I mean, or her opinion is probably getting paid out the back door to just agree with what these guys are saying. I don't know, but I think that she's not on our side here, you guys. She thinks that there's a couple of things that crypto should be unfairly treated with. Anyways, hold on, let's play. He didn't sound. I don't know about the property thing at first, but
for IRS financial product specialists for over 20 years, and it's my privilege to share with you my views. The existing tax framework set out in the Internal Revenue Code is flexible enough to accommodate digital assets, with some clarification and residual gaps filled in by Congress. Yes, digital assets are a new asset class with unique transactions never contemplated before. But this is not the first time that a new asset class is available for trading, nor the first time that the code has been applied.
You'll notice too, you guys, you'll notice that they're going to try and tell you that crypto should not be treated like a currency, but then they're going to tell you things that they're trying to treat it exactly like a currency. That you'll see the counter arguments, the negative sides of these arguments, they're contradictive. You'll see it. We'll point it out as we go forward, okay? Just hold on.
To a totally new asset class. In moving forward, we need to keep in mind the precedent we're setting for the next new asset class and the next one after that. As Jason said, the IRS has repeatedly confirmed in pronouncements that digital assets are property, and the tax code determines tax character, timing, and sourcing for property. Tax character, it's either capital or ordinary. Tax timing, it's going to be based on your accounting method, and when you have dominion and control, that means the free use of the property. And source, geographic location, where the services are performed or the income is earned. As property, many digital assets also fall into the category of commodities, while a few of them are securities. And although stock and securities is defined in the code, without a code definition of commodities, the IRS has generally deferred to the CFTC as to what constitutes a commodity. We really need a code definition. So let's turn out to mining and staking rewards. The code tells us that gross income is income.
First off, I just want to say too, those things that she was talking about with like the location, she was talking about like 3 different things that anytime you transact in cryptocurrency, this information needs to be filed, and it's so redundant and useless and pointless. And that's something that the more practical minds here are trying to say is like there's all this unnecessary need for paperwork and filings that just don't need to be done. This is a different thing. It's not a house. It's not a car. You don't need to know who the manufacturer was. You don't need to know who the previous owner was, who owns the title, when the transaction happened, how much for, what state was it done. You don't need to know all that stuff. That's not the purpose of crypto. It's not the same, and they're trying to treat it the same. And that's what Miss Kramer here either is uneducated in this, or she's very educated. She just doesn't care because she's not paid to care. She's paid to not care or desire something else, so that crypto does not have a chance, and that the banks can remain in control. The people who are probably paying her off to be here, whatever. Anyways, let's just listen.
From whatever source derived. To have gross income, a taxpayer must have an accession to wealth that is clearly realized and over which the taxpayer has complete dominion and control. What does this have to do with miners and stakers who receive rewards for adding blocks to a chain or for validating transactions? Well, under current tax law, their rewards are taxable upon receipt.
So you see right there, that's one of the contradictions, right? You see right there, what she's trying to say is that how come an accountant, whenever they're processing transactions and balancing the books, when they get paid in what they're processing, which is cash, how come they are taxed for that, for the reception of payment, which is cash, right? They balance the books, they write down the transactions in their ledgers, and they get paid in cash, and that is taxed. They're saying whenever a miner processes transactions and balances the books, whatever, whenever a miner's doing work, that they should be taxed whenever they receive their Bitcoin. Where the other side is saying you receive your Bitcoin similar to like a farmer receives corn whenever they plant a seed. And here again is the distinction. This is where they contradict themselves. Miss Kramer here again, this is contradictive, 100% contradictive, because now what she's saying is, so crypto is currency. It's just like currency. But you'll hear her later say that it's not like currency and it doesn't deserve the whatever the word is, diminutive. She's about to say it here, but we'll go over it. It's like you can't have your cake and eat it too. You can't compare crypto now to currency, where rightly so it's more comparable to a crop, a product that is produced that you then sell at the market, right? And then you're comparing it to a currency now, and then later, whenever in regards to currency, you say no, it's not like a currency. It doesn't deserve these rights. It's a hybrid. It's clearly different, and that's why there's these contradictions. Listen, you'll hear the contradiction that I'm talking about right now. She just said again. I'll replay it. She just compared the reception of bitcoins from mining to an accountant receiving payment for doing their job. She just compared it, but then so that means she's comparing Bitcoin and crypto to currency. But then later you'll hear her say it's not currency. Just watch. It's so contradictive.
Taxpayer has complete dominion and control. What does this have to do with minors? Gross income is income from whatever source derived. To have gross income, a taxpayer must have an accession to wealth that is clearly realized and over which the taxpayer has complete dominion and control. What does this have to do with miners and stakers who receive rewards for adding blocks to a chain or for validating transactions? Well, under current tax law, their rewards are taxable upon receipt once they have dominion and control. The awards are compensation for services. When a miner or staker adds a block to a blockchain or validates a transaction and subsequently sells those rewards, the second transaction is a separate taxable sale. There have also been questions about applying the mark-to-market rule under Code Section 475 to digital assets.
I think I didn't play it back far enough, but she did compare it to accounting, but just dumb in my opinion. It's very contradictory. Let's move on. Okay, let's move on.
Chairman Crapo, Ranking Member Wyden, members of the committee, thank you for this opportunity to testify. My name is Lawrence Slatkin. I'm the Vice President of Tax at Coinbase, America's largest digital asset exchange. The digital asset market is no longer...
I'm actually going to fast forward this a little bit because I think that this introduction is nice and all, but let's just fast forward it.
Small or experimental Americans use every day, whether to instantly send money across borders, to secure global financial networks, or to store value. Other countries are writing clear rules to attract this activity. But here in America, our tax code still treats digital assets as generic property, as if nothing had changed in over a decade. That gap creates confusion, discourages investment, and risks driving jobs and capital offshore. The guiding principle is simple: parity with traditional finance. The same tax rules should apply to the same economic activity, whether it involves commodities, stocks, or tokens on a blockchain. Right now, that parity does not exist. The lack of tailored rules has real consequences. One is inconsistent outcomes. Take staking, earning rewards for securing a network. Two people can do exactly the same thing, one through a US-based service, the other through a service overseas. Today, the first may be told that their rewards are subject to withholding taxes, while the second may not. Taxpayers should not get different answers to the same question just because they clicked on a different website. Another friction is capital formation. Imagine a person that wants to lend digital assets and improve market liquidity. If they were lending stocks or bonds, that transaction would be tax-free under well-established rules. But with digital assets, this could be treated as a sale. The result? The deal is more expensive, or it doesn't happen at all.
So he's just talking again about why double tax? Why whenever you pay somebody in crypto, that's a taxable transaction, and then whenever you sell that crypto for cash, that's a taxable transaction. Like that, why do this? And he even says it right there. You might be either making this whole process more expensive unnecessarily, right? Funding the government more, which I know everybody watching this is probably about that, right? You just want to give your governments more money. I know you do. Or wouldn't it make more sense, because it's all just part of like the same transaction, right? You're getting this for this so that you can cash it out into money, which is your government's created fiat currency that you should be taxed in. Why dissuade people from transacting with a currency, a vehicle that is truly better? And you'll hear them say that, right? Throughout this whole thing, the real argument is like, why promote more filings of information? Why promote more taxes on every transaction, every little transaction that takes place on the blockchain, whenever it's like, it's very clear that you should just tax from A to B, not all the little points in between. It should just be from you to the point of sale in dollars. That's whenever it should be taxed, and that's how we can use this technology. That will allow this technology to blossom. If we're throwing taxes and requirements on filings for all these different transactions, it's not going to make crypto feasible because there's going to be too much red tape. There's too much, and that's why the other side wants that. They want there to be too much red tape because then the traditional financial system has a leg up, and that's what they're trying to do. They want to save the banks at the cost of ruining the integration, the usage for the average everyday person in what is truly better technology whenever it comes to transacting. Anyways, let's move on here. Let's move on. Maybe a little bit more. Hold on.
A loan is not a sale, and our tax code should reflect that.
I think that's great. I cut him off too soon. Yeah, a loan is not a sale, right? In crypto, whenever you get a loan, it should be treated the same, right? And that's, again, you'll hear this. They don't talk about this so much, but I think that's a really big deal when it comes to DeFi, guys. And you guys know how I feel about DeFi. DeFi is probably the biggest, most exciting kind of sector in the crypto space, in my opinion. It's the thing that is most suitable for crypto to be, I think, honestly. And anyways, loaning out money should not be taxed, right? In the United States, as far as putting up collateral in the form of a stock or securities or anything like that, you can actually take out a loan and not be taxed on that loan, right? That's actually a benefit that we have here in the United States. It should be the same thing for cryptos. That same rule should apply. And if we see that, if we get that clarity, DeFi would really take off, you guys. And there's a lot of things that clarity, regardless if it's good or bad, I think it would be good overall for crypto. But let's see.
And then there's personal privacy. Picture an ordinary American using a stable coin to buy a cup of coffee. Under today's rules, that small purchase must be tracked and reported on a tax form. Requiring taxpayers to monitor and document such routine payments is intrusive and inconsistent with any reasonable expectation of.
Just more of the same stuff. Let's move on. But more of the same stuff that we've already talked about. And this is Nellen. I forget what her first name is. I don't really care one way or another for her opinions on the matter. I don't know if she provides really any sustenance here, but let's just give her a quick listen, okay? Hold on.
On the taxation of digital assets. Despite the growing importance of digital assets and the increasing number of taxpayers using them, there is still a lot of uncertainty and a lack of clarity when it comes to many digital asset tax issues. Since the initial guidance from the IRS in 2014, the number and types of digital assets and their uses has grown and continues to do so. Digital assets include not only Bitcoin, that was an initial focus of guidance, but also numerous cryptocurrencies, stablecoins, tokenized assets, wrap tokens, and non-fungible tokens or NFTs. This has further complicated the taxation of digital assets because some closely resemble securities, some resemble commodities, and others don't resemble either. Therefore, carefully defined terms will be critical in any extension of existing tax provisions.
So what she just said there, in case you didn't hear that because it was so sped up, she was just saying that she was comparing crypto to property, to commodities, to securities, and in that, again, it's the same rhetoric that you'll hear throughout this, which I think everybody at least agrees on, is that digital assets should be their own thing, right? It's kind of there's a way that these things can be unique in their own sense, similar to all these things where they fit in all these places, but they're their own. It's their own kind of thing. And I think again, depending on how they frame this, I think that could be really beneficial if digital assets are their own kind of sector, because they are. But they have to frame it right. There has to be some fair treatment with that. If we can get that, then there's really going to be a basket of clarity whenever it comes to regulations. If we can kind of section off, not labeling digital assets as securities, commodities, or property, but just digital assets. And they might have like properties to property or commodities or securities, right? But that it might be a whole new thing. And if they form this new kind of like district of whatever, I don't know what proper word to use, this new kind of sector of items, property, if they do it properly, it should be good. If they do it improperly, it should still be good, because then we at least have regulatory clarity, even if it sucks. But let's just continue instead of all this confusion, right? Let's continue.
To digital assets. For example, we recommend that mark-to-market accounting be extended to dealers and traders of digital assets under the Section 475 framework. The intent of mark-to-market accounting was to simplify tax compliance for assets with a value that can be readily determined, such as securities. There are many digital assets with values that are readily determined and actively traded on multiple digital asset exchanges. To extend mark-to-market accounting to dealers and traders of digital assets, Congress needs to know which digital assets would be eligible for such treatment and then specify the types of activities that would make a taxpayer a dealer in digital assets. For example, narrowly defining actively traded fungible digital assets as those traded on one or more domestic digital asset exchanges would treat digital assets similar to certain securities and commodities. This narrowly defined subset of actively traded digital assets could also be used for other code sections applicable to securities and commodities. Importantly, this standalone definition would circumvent the need to determine whether a specific digital asset is a commodity, security, or other type of asset.
And that's one thing I disagree with her with, is talking about mark to market. I don't think that when, and I mean, it depends on how it is. I don't know. I don't know how it would work. Mark to market, right? So if you're receiving payment for something, let's say that I'm doing work in crypto. This is what she means by mark to market. What she's talking about is that when I receive payment in crypto, I'm taxed on what that value is that I received of that crypto right there and then if I took it to market. So if I got paid one Bitcoin's worth 100 and whatever $1,000 right now, when I pay taxes on that. Now, if Bitcoin drops 90% by the time I cash out, or maybe not 90%, sorry, if it drops down to 90K by the time I cash out, I still have to pay taxes on it as if I received 116K. You know what I mean? That's not fair. That's not fair. Mark to market, it works in certain scenarios, but in this scenario, I don't think it's appropriate, right? And this is why, again, the taxation at the event of reception is a horrible idea, or whatever word that the proper word is, whenever they get it denominated to them. It'd be better to tax on the reception of cash, the transaction of digital asset to physical cash. That makes more sense, right? Does it make sense why mark-to-market accounting is, in that sense at least, stupid? It's literally stupid. Like, imagine you get paid in Dogecoin, because guess what? You can actually buy real world goods with Dogecoin. You can buy merchandise from Tesla and from the Dallas Mavericks. Okay, let's say they're getting paid in Dogecoin, and Dogecoin is worth $4 at the top. Somebody pays them in Dogecoin at $4, and then a month later it goes from $4 to $2. Well, they get taxed as if the reception of the payment they made was at $4. You know what I mean? Like, it's not fair. It doesn't make any sense, and it's just going to hurt individuals. It's going to hurt businesses more. It's not going to help them. It's very clear. I feel like they use some jargon and they use some words that people might not understand, or they try to frame it in ways that people are just bored and they won't listen to them. But it's like, if you just pay attention for a second and you think about it, it's very clear which side here is not pro, not just crypto, but pro advancement, pro people participating openly in a free market. It's very, very clear. Anyways, you guys, it's crazy. We've got so much more to talk about. Let's get going. Okay, let's move on. These are just little clips where I kind of will give remarks. We're not going to watch like in-depth parts of all these, but I've got some remarks, and then we're going to get to the end. The purple ones here, these are the funny ones where I'm going to just basically talk smack about every single one of these guys. Anyways, not every single person here, but just in those clips. Anyways, let's get into it. Okay, hold on. Let me see here. Oh right, I got to mute this. Okay, here we go.
A sale, and our tax code should reflect that.
Done right. I have just a couple, I have a lot of questions, but I'll just go into a couple of them. And first, Ms. Kramer, is for you. And if I understood your testimony correctly, you said that you have some concerns about a de minimis rule, I'm not quite sure whether your concern was whether to have a de minimis provision or whether that we needed to get it exactly right. Could you?
A de minimis rule, I think, would be fine. But how he just said it needs to be exactly right. Kramer, and the cronies that are in charge of her probably are not a fan of this de minimis rule, because if they do that, then that promotes the idea that cryptocurrency does have similar properties to currency. And they're all about not having it like that at all, not having it like property. But just listen, again, remember earlier, she was comparing crypto to currency. This woman right here, what she's about to say, just remember this, okay? Earlier, whenever I took that moment out in the beginning of the video to pause and say that she was comparing crypto to currency by saying that an accountant balancing the books, doing the transactions, the ledger, recording the ledger and all that stuff, getting paid in cash for that, he gets taxed or she gets taxed. So then whenever the miners are doing the same thing digitally on their own autonomously and receiving Bitcoin, that should be taxed as well, as if it's comparing it to a currency of payment, a form of payment, right? And it is a form of payment, but it's more like what Jason said, Monsanto, whatever his last name is, where it's like a form of reception from the seeds you sow, right? Like a farmer reaping their crops, right? That's what it is. It's not the same as receiving dollar bills. But again, Kramer was trying to promote this idea that it was similar, that it's the exact same thing. And now you're going to hear her say that they are not the same, that crypto and fiat are not the same, contradicting herself right here. Just listen.
Explain what you were saying there.
In my written testimony, I did go to some length about it. The problem with a de minimis exception is that it is a way that there can be abuse.
She can't even answer either. Watch. What's the problem, Kramer? Tell me. Give it to me. You can't. Just listen, guys. Listen.
Some length about it. The problem with a de minimis exception is that it is a way that there can be abuse and people can take advantage of it. That's really what the concern is. And so, but
how? How can they, if there's a limit, how? And are they gonna take abuse of $200 or even like $10,000 like that? Oh no, that's the worst financial crime that's ever happened, right? Or are they just going to use it for day-to-day purposes? Maybe they want to buy a jet ski. I don't know. Dumb, stupid, right? It's like if there's a cap, you're only allowed to spend so much in crypto on one specific thing. Then you can the people committing financial fraud are not dealing with low cap numbers, right? You understand that? And she knows that. She knows that. She's clearly not a dumb woman. She knows that, but that's why she gives this dumb answer. And alludes, just listen again.
The problem with a de minimis exception is that it is a way that there can be abuse and people can take advantage of it. That's really what the concern is. And so talking about setting a maximum number.
It's a concern, so how?
Having an income level, maybe, having a maximum number of dollar amounts, whatever. And so
she has no clue. She's just throwing things out here. But yes, kind of on the right track, but let's keep going.
If there is going to be a de minimis exception provided for digital assets, then it needs to be crafted in a way that is probably more specific than the current exception that we have for foreign currency.
So here she's talking about it now. If it's going to have a de minimis effect, it should not have the same as what we have for foreign currency because they're not the same as currency. You heard her say it right there, right? She just said it right there. It's not the same as currency, but earlier comparing it to currency received as payment upon reception as a block reward, as a mining reward. This guy is a wet blanket. Let's listen to the wet blanket talk. Okay, here we are.
Congress creates the de minimis rule for foreign currency so that taxpayers aren't burdened with tracking gain on personal transactions in local currency abroad. Now, this is where it gets, I think, into the debate. It's been suggested that there be a similar exclusion for digital asset transactions subject to an annual cap. Now, my question is, even if there were to be a de minimis exclusion with a cap, would you still need reporting so that taxpayers know their gains on each transaction?
So these transactions that he's talking about reporting on are just insignificant transactions, right? Sometimes with these protocols, like you hear whatever the guy is from Coinbase, whatever his name is, I forget. It's like it starts with a K. He's one of the he's the other guy. There's two girls and there's two guys, not Jason, the other guy, as a witness. He's from Coinbase. He says that whenever you transact in USDC, there's a very, very small, it's like a fraction of a cent transaction that happens too. It's just part of how it processes. It's part of the protocol, part of the chain itself. That is an insignificant transaction. And if every transaction, you have to report those transactions whenever you send money from place to place, you're gonna have multiple transactions. You're going to literally double, triple, quadruple the effects of the filing required information on something that isn't even worth like a fraction of a penny. So this guy right now is saying, do you think this stuff should be filed? Should it be filed? And this lady Kramer is going to answer, oh, of course. And it won't be a big deal. It's going to add like 3 times the work or more. Listen.
Make sure they don't get in trouble with the cap and that's.
Yeah. It's just so we make sure people aren't getting in trouble. We're monitoring these microtransactions worth less than a penny because we want to make sure people are safe. Right. Instead of just monitoring the main transaction. Right. Okay.
They would need to keep track of the transactions in order to prove compliance, so that as a practical matter, it really wouldn't make a difference.
And it sounds practical, right? You should keep track of your transactions, right? But that's not how it is. And there's billions of dollars every year that of actual cash that are not microtransactions that are lost every year because of the malpractices in the government, waste and fraud, spending, right? Overspending, stuff like that. And she's like, yeah, it wouldn't be here. But what'd she say? Hold on.
It really wouldn't make a difference.
It wouldn't make a difference. It wouldn't make a difference, she says. It's not a big deal. Throw on the extra filings. Make them have to record these little microtransactions that are part of the protocol's design that are just inevitable, that have to happen. Make them record everything and do literally double, if not triple, if not more work. It's not a big difference. It's not a big difference. Sure, you'll have to file out every time you sell $100 worth of whatever into USDC and then you transact that into cash. You'll instead of doing the transaction of your Bitcoin value to USDC value, now you have to do the microtransaction too from Bitcoin to USDC and then USDC to US dollars. You're gonna have to do 2 extra transactions for what would just be 1 transaction. But sure, and you'll have to file it. That's the thing. And now the IRS is going to be bombarded with a bunch of nonsense. They're like, whoo, yes, it is a big difference. It will be a big difference. And I think she knows this. And that's why she talks here very plainly. Because, again, I don't think she's a dumb woman. I don't think any of these people are dumb. But there's a couple that are sitting in the Senate that are. We're going to hear a couple of them later. Let's get on to this, okay?
And I completely agree that this is a hearing about a novel and complex.
I like this guy. I don't know this guy. I don't know too much. It's the first time I've ever heard him talk, but I like this guy.
Issue. Listening to testimony, looking at the written testimony, it also strikes me as this is an issue that really should be completely nonpartisan. Not that there won't be some.
You see what he's saying here too. He's trying to set the floor. Republican, Democrat, doesn't matter. We should all be on the same. This is clearly an advancement in technology. We should use it to the benefit of our people, of our constituents, of our society, and our country. It doesn't matter. And he talks to Mr. Wyan or whatever his name is, Senator Wyan, the guy who, we'll get into some other stuff later with him, but just saying like, hey guys, this isn't something that we should be combative with, just because it's very commonly known that Republicans are pro-crypto. There's less of a democratic leftist presence in crypto, but crypto's not something that's left or right. It's for people who understand that it's the advancement of currency. Maybe people with a level of intelligence, right? That doesn't mean that just because there's more people on the right. I mean, there's plenty of dummies in crypto. There's plenty of smart people in crypto too. But I'm just saying, I like his approach, right? Like let's put our animosities aside as politicians. Let's just agree. Let's try to make something that works that we can all agree on, so that we can make this as good as possible for our country. Like that's like literally his approach here. But that's what he says. Who knows if that's what he means? But you never know with these politicians. But let's keep going.
Controversies as we start talking about the details of de minimis. I literally have a couple hours worth of questions here, and I'd love to assemble a group like this and probably a broader group to just go through. But first of all, as we approach this, I would like to, kind of like the medical profession, first do no harm. I'll just quick ask you, is there a particular thing that would do harm that you've been hearing?
And I love that. I love this question. And it's a shame that Jason, whatever his last name is, Subsanto or whatever his name is, it's a shame he misunderstood the question because he answers things that are doing harm right now. I think he would have given a good answer, but let's hear him out nonetheless.
Just quick down the list. I don't want you to spend a whole lot of time on this. Is there something that we really ought to avoid? We'll start with you.
Yeah, I would say the current tax treatment of staking and mining rewards is what's doing harm, and that's one of the main things that needs to be corrected.
But it's happening right now.
Yes.
Yeah, but I'm saying if we would write something that would do harm. But basically,
he wants to give every single person a little bit of time to talk. So that's Jason's time Santo's time is gone now, but that's okay.
all of you are in agreement. We've got to provide legislation to define these things, to provide clarity. So again, I think the opportunity here is, okay, what are those things that need to be defined? And I know a number of you got very specific suggestions here. I would want to find what does everybody agree on, isolate that, get those definitions in a piece of legislation, then we start haggling over the disagreements. But again, I first want to say, what would we do to really create harm? Ms. Kramer.
Well, that's a great question.
I try and have good ones.
Yeah.
It's a great question because she can't answer it. It's not something she was prepared for, right? She's clearly planted here, prepared with all the questions and answers except for this one. And it's a critically thinking question. Like what, it's something that I would have a hard time answering myself, but you can see that this is the one time she has a hard time answering. And she even says right here.
Right. Of course, you asked me first.
She didn't ask you first, or he didn't ask you first. He asked Jason first, and he misanswered, right? It's not political. Don't make it political. Don't. It's not about that.
I would say that one of the things that you could do to avoid harm would be to make the clarification, to have harm.
See, she's given a blanket statement that sounds appropriate, but without backpedaling on anything that she said before, right? Without giving anything that could contradict what she's already contradicted or said before. Clarity. Yeah, okay. If we don't have clarity, that's obvious, right? That's an easy answer. It's like, what'd you do yesterday? Well, I breathed some air, I drank some water, I used the bathroom, and I slept. Okay, we all did that. That's a blanket statement of just something that we already know. Well, I would play the rest of this, but basically they all say the same thing, which is that regulatory clarity, really. If we don't have clarity, that would cause some harm. I feel like this guy might say something else, actually. Let's see. Let's hear him out.
Do you have anything in particular that you think would do harm if we would put something in legislation?
Thank you, Senator. I think that my theme is that there's a lot of potential for over-reporting. We spend a lot of time on that, even in this discussion about de minimis and with stablecoins itself. There's an enormous potential. This is a democracy.
So that's good, but that's something we've already talked about too, right? Just over-reporting. We don't need all these files. We don't need to report every single transaction. We just need the meat of it. You need to understand, you don't need to worry about the transaction fees, the processing fees, the whatever it might be, right? You just need to understand the main transaction, the primary thing that's happening, right? That's it, right? You don't need all these little intricacies to pile up the paperwork of filing these transactional forms. Anyways, moving on.
Number of rules today that, or lack of clarity, that shifts investment outside the United States. I'll give you two examples. One is we don't have clear rules on sourcing. Sourcing is determinative as to whether withholding tax apply to investors. Investors outside the United States don't know whether the source rules for staking or for digital asset lending are treated as foreign and domestic. I think we should implement a rule that we've recommended, which is that if you're a foreign person, it should be sourced according to foreign, and therefore you're not subject to withholding tax. Again, that lack of clarity shifts investments. People just don't do it. If you have a choice, you'll invest outside the United States.
So there, he's talking about if you're a foreigner investing with United States cryptos or companies, your taxes should reflect your country's regulations, not ours, right? Something like that too, which is also important, right? Having fair, a lot of this is just fair, common sense, practical stuff. It really is, right? Some of it's not, but let's move on. Okay, this woman. Oh my God.
And in addition to wanting you to answer that question, Ms. Kramer, I was also going to ask you how the qualified appraiser requirement for cryptocurrency donations hold back the U.S. digital assets industry and nonprofits who accept cryptocurrency. So do you have more to add?
Well, the only thing that I would add to it is just to underline what was said, which is that it's a rule that doesn't need to be in place with respect to publicly traded products, and to treat publicly traded cryptocurrency as if it's a unique piece of artwork is really incorrect and unnecessary at this point.
All right.
Which is a lie, right? Because there are NFTs, which are unique, non-fungible tokens. Just because, and I think this time this is a little bit ignorance on her part. I think she genuinely doesn't understand what she's saying. She's just thinking about the fungible tokens. But the NFTs, there is literally digital art. That is something that should be focused on, because there is a lot of money in the art world and will soon be in the digital art world as well. There's a whole sector in the crypto space, this $4 trillion market that we have that's growing. It's a whole sector of that pie, and you just want to pass it off, right? This one, I think she just clearly is ignorant on. But let's move on. Oh my God, it's gonna get better, guys. We got the entertaining stuff coming up here. Okay, if you're bored, just wait.
Tax loopholes, which would be a good thing. But the proposals I'm seeing follow a familiar movie script. Industry lobbyists want special tax rules for crypto that will make crypto billionaires richer and give crypto an unfair advantage over other kinds of competing financial products.
Isn't it funny? Isn't it funny that this woman who's paid like $100,000, $200,000 a year, who's got like tens of millions or $100 million, there's no way that she would have the amount of money she has by her salary. She's clearly getting paid under the table or through insider information like Nancy Pelosi is. Isn't it funny that she's talking about fairness in finances and stuff? Isn't it funny? Isn't it funny? I think it's funny. Let's keep going though. Okay, hold on.
So I want to run through a few of those. Ms. Kramer, you're an expert on our tax law, so I've got some very simple questions for you. Let's start with the de minimis exception, a proposal that would allow crypto investors to avoid reporting income from crypto transactions under $300. If someone
First off, it's not $300. It's up in the air. We don't know. And they don't have to report taxes on it. It's not that. She's framing it in an improper way. They wouldn't have to report the gains tax. So if you had $100 in Bitcoin, it turns into $1,000 in Bitcoin. You use that Bitcoin to buy $100 worth of something. You're only getting taxed on the transaction. You're not getting taxed on the gains tax from that. Okay, right? Does that make sense? Because then you're getting taxed twice when you're just trying to use it as tender, right? That's not a big deal. If it is a big deal, then we're going to hinder crypto's capability as currency, which is the whole purpose of it.
Someone bought $300 worth of gold or $300 worth of Apple stock, would they be required to report any income they made from those transactions?
But gold and Apple stocks are different. They're different. They're not the same. Crypto is not the same. It's different, right? It's different.
Yes, they would. All right. If crypto investors get...
She knows this. She's just, this woman, guys.
This de minimis exception, would they pay less in taxes than traditional stockholders for precisely the same kind of transaction?
Yes, you would pay less, yes, with the de minimis, yes, absolutely. But you'd pay the same amount as the same transaction with fiat currency. Nobody's going to pay for coffee with their Apple stock. Nobody's paying for coffee with gold bars. That's not the purpose of crypto. If you do this, you're going to take away the purpose. You're going to change it. You're going to prevent it from being what it is. And that's what she wants. That's what her constituents want. The people who are paying her money want, because they're the ones that are in control of the financial system. And turning it into crypto to the people will take away our power.
They would pay less. All right. The Joint Committee on Taxation estimates that this proposal alone would be a $5.8 billion tax boost.
She just pulls numbers out of her ass, too.
For the crypto investors. So let's do a second one. An accountant who runs his own business, gets paid for updating books.
So again, they're not going to compare it to fiat. They're not going to compare it to fiat because at that point, then, right, she says, why is it that somebody transacting in crypto isn't getting taxed for their gains, but if you did this with stocks or gold, then they would, because no one transacts with stocks or gold. You know, maybe gangsters transacting gold. I mean, I don't just mean gangsters, like maybe mafiosos also, same thing. People with a lot of money, I just mean ballers. Maybe they do. And they probably do that under the books anyways. But all I'm trying to say here is, why are you saying, why don't you say in that whenever we transact with fiat currencies, foreign currencies, there's the diminutus. What's the word? Hold on.
So let's $5.8 billion tax boost for the crypto investors. So let's do a second one. An accountant who runs his own business, gets paid for updating books and records, you know.
It's not diminishment. I forget what it is. Diminishment. I can't say the word. Whatever it is, fiat is allowed to do that, but crypto's not, because crypto's not like fiat. That's their whole stance. But now she's going to compare it to fiat again.
Just standard stuff. In the crypto world, miners and stakers get paid for updating the blockchain. An accountant who runs his own business, gets paid for updating books and records, you know, just standard stuff. In the crypto world, miners and stakers get paid for updating the blockchain, crypto's financial ledger. The accountant, of course, pays taxes on their income when they receive it. But one crypto industry proposal would allow miners and stakers to delay paying taxes on the crypto they earn as income until they sell it, which could be many years later, if ever.
And that's fair. And if they sell it many years later, guess what? They have to pay the capital gains tax overall. It doesn't matter. It doesn't matter. You're just trying to create more headache for the average person. You're not trying to help the average. This is not going to help anybody. This is going to prevent the public from having freedom in their choice. That's what this is. Stupid. Very stupid. I want to keep listening.
Ms. Kramer, if this provision passed, would the miners and stakers effectively pay less in taxes than accountants, even when they are doing almost exactly the same work?
And no, they wouldn't. They wouldn't have to pay it on the reception of the currency, but when they cash out, yes, they have to pay the same. They have to pay the exact same as accountants. That's it. That's it. It's the exact same. It's all based on their tax bracket. It's the same as capital gains. The only difference might be that there's long-term capital gains capability. So if someone's getting paid in crypto and they wait a year and then they sell it, which I can't imagine if someone's doing work that they're going to wait a year to cash out, long-term capital gains, then you would actually have something to say that it's cheaper. But even then, you're waiting a year. Even then, you're paying capital gains tax still. No, it's not. It's not. But they're going to say, yes, it is.
It would pay less.
So that's...
Did you see her face? She's like, this is not a good example. Look, even Kramer is like, we're reaching here, Elizabeth. We're reaching. Listen, look at her face.
Pay less in taxes than accountants, even when they are doing almost exactly the same work.
They would pay less.
So...
Did you see it? They're like, they'd pay less. We're reaching right now, Elizabeth. Maybe dial it back. Let's move on. We're almost done here, you guys, okay? We're almost done. We're getting to the good stuff, okay?
I've been struck that people's medical data is commonly used by people who make billions, trillions of dollars. But their data doesn't contribute anything to their own financial welfare. Now, there is that indirect.
This is great. I love this guy. What he's talking about is how people can finance themselves, how companies, insurance companies, intelligence companies, what's the word I'm looking for? Just like customer service marketing agencies, there we go. How they make profits off of your information, or they buy your information that you give for free when you're online browsing, right, with your cookies and everything. And you don't get paid for it, but somebody else does. So the marketers, the people collecting the data, they're the ones that get paid for it. Even though you're just giving it there willingly, there's no way for you to get paid. This right now, what they're talking about is a way to pay people for their information instead of their information being sold without them having any pay in it at all, which is pretty cool. And you'll hear he has a question of how to handle this. I have an answer, which I don't know why. Come on, Jason. I expect more out of you. You should know the answer to this. I'll tell you guys, though.
Benefit of medical advance, but there's nothing like, my gosh, I had the one gene that was a cure for Alzheimer's, and somebody's going to do really well on it, and I get zilch. Now, we've seen litigation on this in the past, and now I think there's informed consent that your data can be used. But I think it would incentivize Americans and it would share the wealth if you could actually have a distributed ledger in which the monetary value of my contribution would accrue to me with financial advantage. Does that make sense, or am I speaking too kind of like highfalutin?
That's literally the purpose of crypto. If you didn't understand what he said, again, let me try and re-say it, because this is one of the groundbreaking things about crypto, is that you can get paid for your information. When you're on Facebook, when you're on your social medias, you're doing whatever, you're buying something off of Amazon, you can get funded. You're not going to make a killing, but you can get payments where instead of one company that's collecting this data and selling it to marketers or to whatever other companies, they're selling it off and they're collecting millions and millions of user data, hundreds of millions even, or however much it is, and selling it off. Individually, it's insignificant amounts, but they make a killing off of it. Why should they make a killing off of it? Why? That's your information. Why? Maybe they should have a portion of it, but not the whole pie. Why don't you get any of it? Crypto's going to change that. It's going to change that, and that's really cool that this guy's bringing it up. I like this guy too, Mr. Cassidy.
No, that makes sense.
Yeah. So, how do you do that practically? How could you make it so that if Senator Crapo's
And look, I'm not the most experted person in this. He's asking, how do you do that? How do you use crypto to do that? And none of these guys answer. I'm surprised. I don't know everything, but you would tokenize it, right? We're going to tokenize real world assets, your information, your medical records, your privacy preferences. That's real world assets. That's RWAs. You can tokenize it. You tokenize it. You have a token, effectively, and he says, would it be through a wallet? No, you don't want a wallet address. You want a token that is affixed to your own like data chain of information. That's it. That's what you want. You want it to be tokenized. I'm pretty sure. And again, I'm not the most experted person in this. Maybe I'm speaking about things that I don't know fully, but I don't think the answer is to just have a wallet. That's not. I think it'd be better to tokenize the information. But anyways, moving on now. We're done with the really important stuff. I hope that it's clear as to everything that's happened so far in this hearing. And we haven't gone over everything, but largely we covered most of it, right? And we're going to get into some of the I don't know if it's fun. I'm going to have fun. I don't know if you guys will have fun, but I'll have fun on this next part. But it's not so much informative. It's more just like pointing out the obvious tactics here from one side of the aisle that they're just trying to take away. They're not actually here because they care about crypto. They're here because of their own agendas, and there's some funny stuff we're going to point out. But the majority of this hearing so far has been really just trying to get practical, sensible, fair treatment for digital asset taxation. That's it. That's it. One of the guys even says that we should get rid of the wash rule because in crypto, not in stocks, but in crypto, you can sell something for a loss and buy it back the next day, and that's not wash trading because it's property. And he's saying we need to do away with that. But how do we do away with that if it's considered to be property? You need to make it its own asset class. And digital cash, digital assets should be their own asset class. They are. I think it's obvious. And I think everybody kind of hints at that throughout this. So we're gonna get digital cryptos as its own asset class. We're going to, hopefully, from what it sounds like, we're going to have a lot of sensible, realistic, fair regulatory stances on this. And hopefully the stuff that just which sounded crazy as they're saying it. Even what's her name? Even Kramer was like at some of the stuff that Warren was suggesting. It's very clear that some of these regulatory proposals are outlandish and unnecessary and just convoluted. It's very clear that some of them are more sensible. And it's not about left, it's not about right, it's about what makes the most sense to use this new technology, cryptocurrency, to benefit the constituents of the United States of America, the public, the citizens, the country as a whole. And it's not going to be through red tape. The UK is behind in crypto because they laid on so much red tape. China is even behind. They're ahead of most countries, but they're behind us, the United States, because they were so infringent on cryptocurrency rights. We haven't been the friendliest ourselves to the United States, but we've at least never banned crypto, right? The only thing we've done is gone after huge agencies or companies that break the law, which there was no law for, and we seized their assets illegally until Ripple stood up to the SEC. Anyways, let's move on. Let's talk about this. Let's finish this up. This is the parts that I'm gonna have more fun with. Let's see. Yes. Oh no. This part was playing the whole time. I don't know. We're just gonna let this part play then.
Before I get into my questions, I do want to take a moment to address the federal government shutdown. While the topic of today's hearing is certainly...
Oh yeah, all these, that's what all these are. It's people just saying, I want to discuss the topic of the federal government shutdown. It's like, dude, we're not here to talk about the shutdown. We're here to talk about crypto. Stop making this all about you. Watch, just listen.
Important, and I have questions for you. Congress should be focused right now on working together to find a bipartisan path to reopen the federal government, restore critical services for people, prevent health insurance premiums from doubling, and keep millions of people from losing their coverage and the care that goes with it.
And they all have an agenda. Every single one of these people, I remember where this was now. Every single one of these people, they clearly have an agenda because they all reference the healthcare doubling in price. That's what they say. Okay, that's what all of them say, is that the healthcare is going to double in price. I don't know if it is. I haven't been keeping up with the times, but I don't know what the right is proposing. I don't know what the left is proposing, but I know that they disagree and that there's a shutdown. I haven't been keeping up with the times, okay? But I would bet a lot of money, because I know these tactics, I know these antics that I've seen from one side of the aisle, that they say that the president is trying to double healthcare costs and benefits for the average American. I would bet a lot of money that even if Donald Trump gets his way and the left has to come up suckling to the table, I would bet that our healthcare premiums are not doubled. I would bet they are not. I would bet it's like, if anything's more expensive, it's probably something where it's like deserved to be more expensive or not. Maybe I'll eat these words, but I've heard these kind of false claims time and time again, this administration and last administration too. And I would just be curious to see, is what she's saying true? Is what they're saying true here? Just listen to this guy. This guy's going to do the same thing, right? They all say the same thing. It's clearly an agenda that they're promoting here.
Costs they face today. The Republican response to them? Silence. With so many people being hurt by the shutdown and desperately worried about the hardships to come, I think it is so unfortunate the Republicans are making their warped priorities clear. I'll start with a few facts.
Their warped priorities, you're here too. And there's people from the left that are here. There's people from the right that are here. Clearly on the witnesses, the two ladies are on the left and the two guys are on the right. I don't even know if both of them are on the right, actually. I don't know what their politics are, but the two guys seem more sensible. The Kramer seems like she's a plant from the left. And then the other lady, she might not be a plant. She's just kind of in the middle, honestly. And I think she's smart. I just don't think that, I don't think all her thoughts are beneficial for crypto, right? They're a little bit too to the book for what securities and stuff might be, not for what crypto should be. Anyways, again.
The federal government is shut down while Republicans control the House, the Senate, and the White House. Rather than going forward in good faith, the administration is engaged in hostage taking.
Dude. Just stop. We're here to. Yeah, I'm like, stop, knock it off. We're here to talk about crypto. Hold on.
No matter the cost.
But yeah, just like, it's like, why are you making this? Like, go ahead, whatever, use your platform. I get it, but that's not what people are here for. We're not here to hear your political BS. We're here to hear crypto taxation. But you're using this as a moment to make it all about you, or to smear a campaign, whatever. It's pathetic. It's actually really pathetic tactics, honestly. If this was something like, if there was something dire going on in the world right now, different story entirely. But the government being shut down, whenever all these government employees are in furlough, which means that whenever they open the government back up, these employees get paid whatever they weren't getting paid while the government was shut down. How many lives? He's talking about all these lives that are going to be affected. Who? They're going to get taken care of. They're going to get paid once the government opens back up. He knows this. He works in the government. He knows this. But it's not about spreading truth. It's about triggering a response within people, trying to virtue signal, trying to promote this BS. Just keep listening though.
Millions of Americans now are facing a huge increase in their health care premiums. This is the real world of the suffering.
I'm an American. I have not actually. My healthcare premium has gone down actually by $100. It genuinely has, but that's because we added a new edition, and there's some kind of rule where that apparently we get cheap with 4 people instead of 3 people. It's actually cheaper for whatever reason. Maybe next year it'll be more expensive. I don't know. Year to year things get more expensive, but it's not going to double. They keep saying it's going to double. Again, they're just hitting this.
Seeing this morning, the Trump administration and Republicans won't lift a finger to help them. Resolving this shutdown and getting our fiscal house in order really ought to be the top focus now of the Finance Committee. Unfortunately, there hasn't been a single hearing on the $5 trillion tax bill that was passed a few months ago. Biggest bill in history, committee with jurisdiction, not going to discuss it in a bipartisan way. On top of that, the economy's showing real signs of weakness. Jobs are fewer, prices are higher. Millions of Americans are about to get clobbered with those health care.
And there was so much discussion. They didn't need to have a Senate hearing about it. Congress was talking about it. There was so much discussion about this stuff. There were minds that had to be changed for that bill to get passed. It didn't look like it was going to get passed at first. There were timeless discussions with this. He's just milking the bread. He's buttering the bread. He's milking the cow, is what I meant to say.
Costs. Now, I do agree with the concept of working on crypto's treatment under the went not exchanges or brokers would be forced to write.
I think we're good with this. I just want to play this next part here real quick.
Crypto, I have to respond just briefly to the effort to relitigate the one big beautiful bill. The bottom line is that yesterday the Republicans voted to keep the government open, and the Democrats insisted on over $1 trillion of new spending in order to do so.
So the chairman of this committee says the Republicans voted to keep it open, but the Democrats demanded $1 trillion in funding for whatever, I don't know. And maybe it's good stuff. Maybe it's not good stuff. I don't know. But there was some kind of disagreements. And he's setting the record straight here. And this guy turns around and he's like looking to his assistant. He's like, just shake your head and say no, as if this guy doesn't know what he's talking about. Anyways, moving on. What's this part here?
Thank you.
Thank you, Senator Warren.
Thank you, Mr. Chairman. I'm just going to start by acknowledging how absurd it is that the Senate is convening to discuss anything other than this Republican shutdown and stopping Donald Trump from throwing 15 million people off their health care and more than doubling health insurance premiums for millions of Americans.
There it is again. It's despicable that we're talking about something that we planned before the shutdown even happened. This is already on the books. And literally 10 hours after the shutdown happens, we're meeting. Oh no, it's despicable that we're doing this thing that was planned out weeks ago. And now I'm going to take a moment to blame the current administration in every way that I can and say the same thing that my constituents have said, which is that they're going to double the health insurance. Are they though? Are they, like, where are you getting this from? Is that actually going to happen? Because that's bad. That would be terrible for the average American if that actually happens. But they also told us earlier this year that the cost of goods would go up, that our economy was going to be in shambles, that these tariffs were going to screw everything up, that the big beautiful bill is going to cause a recession. Where's any of that? Why is our economy showing strength? Why is the stock market at new all-time highs? Why are things going better now than they were the last 4 years, economically speaking? And is this more rhetoric? Again, and I want you guys to be aware, people on the right, people on the left, whoever you are, if you're watching this, if in 2026 healthcare premiums do double for the average American, I'm going to make an apology letter. And I think everybody on the right needs to look at this as a moment where, wow, the shutdown really was for some kind of benefit on the right side. Wow, that's some BS. The people got screwed over. But if there's no doubling. Not even a sizable, significant increase to the insurance, the health insurance rates for the average American. If you're on the left, I want you to just really think about how divisive this is right now, because they've all said the same thing. They've all said that this is despicable when the Republicans are trying to double the health insurance rates. But it's like they're just saying that, I think, to deflect from whatever the true discrepancy is here as to why the government shut down. I don't know, and I try to stay away from politics, but I'm using this as an opportunity.
Supposedly about clarifying crypto's tax treatment. The context is that crypto holders aren't paying at least $50 billion per year in taxes that they owe. In theory, reform proposals could plug those.
Again, where's she getting those numbers from? She's just pulling these numbers out of her ass.
Crypto tax loopholes, which would be a good thing. But the proposals I'm seeing follow a familiar movie script. Industry lobbyists want special tax.
And we've seen this already. She goes further to talk about I forget where, but she goes further to talk about how it's despicable, or is it her or is it the other guy? Someone talks about how cryptocurrency needs to use more renewable energy and how the energy cost. Oh, that's this guy actually. Hold on, we got one more guy. Let me see. I'm jumping ahead here. Let's see. Is it? Yeah, it's this guy, this freaking guy. Listen.
Thank my colleague, Senator Whitehouse.
Thanks very much. This is, I'm going to make an off-topic comment and then an on-topic comment.
Before we get started, I just want to say this guy takes the cake. We're going to end it with him. We're actually going to end it with one more senator after this, but this guy takes the cake. He's genuinely a doofus. He genuinely doesn't know what he's talking about at all. So instead, he talks about something else. Instead of talking about what we're here for, to talk about the taxation of crypto, he has nothing to say because he has no level of intelligence. So he's going to talk about things that have already been talked about and basically just what's the word I'm looking for? Filibuster all his time away talking about nonsense. And we'll point out the nonsense. This is not an opinion. This is a fact. Just listen. Okay.
Off-topic comment is because the elephant in the capital city today is that our Republican colleagues and the president have shut down the U.S. government as of last night. And they've done so for a really extraordinary reason, which is to take away Americans' affordable care health benefits.
I don't know. I don't know about that. Is that true? Is that real? Is that what's happening? I don't think so. I think they're just saying that.
The affordable care health benefits don't just land in Democrat states, they land in Republican states. Polling shows that Republicans want, real live voting Republicans want, the affordable care benefits to be extended. So
and this guy's clearly not smart because now he's saying it's just the affordable care benefits. So from subsidized tax benefits for people of low income. So the average American then will not have their health insurance cost more. It's just people who are already getting a pretty sizable discount. And I would assume if their health insurance costs more, it'll still probably be more affordable than any other average person could have. And if people in poverty are having a hard time accessing health insurance, that's a problem. Everybody as an American, I think our health insurance is a mess. And I'm not trying to weigh in on this here. I'm just saying what I'm really trying to weigh in on. And if anybody's coming at me in the comments saying, this fact about health insurance, whatever, I'm not trying to talk about that. I'm talking about the divisiveness here. This is divisive. It doesn't apply to the average person, yet they're trying to act as if it does, right? That's my whole point. And they're using it as a point to take away from the real purpose of why we're here. I don't care about their stances. I wouldn't be talking about it at all. We're here to talk about crypto. Why are you making me talk about this? Let's go.
asking is that Republicans do something that they should be doing anyway because it's the right thing to do and because it will benefit their own constituents and because their own constituents actually want it. That shouldn't be a hell of an ask. But it's an ask that is apparently so awful to Republicans that they'll shut down the government instead of sitting down and talking with them.
Why do they do this? Just
listening is the cost problem of electric bills. We could.
So now he's going to talk about the cost of electric bills with crypto. You guys, over half of crypto, over half of it, all the transactions done are done with renewable energy. Look it up. Over half. Over half. What's this guy talking about?
Solve a lot of the problems that AI, crypto, and big data centers are causing if this industry, which is going to make billions and billions of dollars, I feel like Carl Sagan there, billions and billions of dollars, would simply do the responsible thing and bring its own clean energy to the grid with it. That ought not to be asking too much. The choice not to do that and to simply dump this added demand onto the grid has a very predictable effect. When you add all that demand to a fixed supply, what happens? Prices go up. That's supply and demand, the elementary theory of market economics. So all of these new facilities are going to be driving electric utility bills up for regular customers.
No, man, because what's going to happen is the cost to transact, the whole purpose of crypto is that the cost to transact things will be cheaper. It'll be cheaper. It's going to be cheaper. Now, there might be more facilities coming online to produce power for these blockchains doing cryptocurrency things. That's one thing. But there will be less power going toward Visa, going toward central bank transaction points, wiring agencies, stuff like that, because there will be less money involved. There will be more digital currencies instead of physical currencies, so there will be less production in physical currencies with dyes and paper and metal for change. There will be less oil and stuff that's being used manufacturing all of these goods and sending them with gas across the country physically with cash. Crypto is efficient and largely better. It's optimal. Cash is obsolete. And over half of the electricity generated for cryptocurrency transactions to date, over half of it is renewable. So all these things he might not know this because he's clearly dumb, but, and I don't say that. I really don't like to say that often. I don't say dumb or stupid, but he's clearly not the brightest bulb in the box there. Right? If there's an apartment complex on a whole city block, he is not the brightest brick on the block. Okay, clearly. Or he is, and he just then he knows what he's saying is not true, which makes it even worse. None of this is an opinion. This is all a fact. Everything that I've said right now. This is not an opinion. Some of the other stuff, some of these political things where I'm talking, making fun of Elizabeth Warren. Okay, whatever. Okay, I'm having fun with that, right? But this is facts. What I'm telling you here. And he either he doesn't know this because he's ignorant, or he knows this and he's choosing to lie about it anyways.
And I hope the industry will think about, I mean, I get that you've got this huge political runway with the Trump administration, and you can basically go raiding and pirating through the political world right now. But at some point,
why is crypto a right thing? People on the left, please don't let these people convince you that crypto is not for you. Just because you have people that you disagree with politically doesn't mean that you should avoid what will be the best wealth transference of your lifetime. Okay? It's going to happen. What do they say about progress? You can either get steamrolled by it, get out of its way, or go with the flow. But you can't stop progress. It doesn't stop. Don't let these people try to convince you that you shouldn't be a part of progress, okay? Which is cryptocurrency. Now, maybe not every cryptocurrency, but find one that suits your beliefs.
you know, you only get one chance to make a first impression. And if your first impression to the world is, we're not going to take care of our own energy supply, instead we're going to drop into your grid and make all of your electric rates go up by a ton because we're not willing to be responsible, you're going to have to live with that for the rest of this industry's life. And then it's not just added demand for fixed.
Just dumb, literally dumb. It's all, half of it's renewable, over half of it's renewable. We actually have a lot of policies put in place that advocate for renewable energy and tax incentives for anybody that's using renewable energy or expendable energy sources whenever it comes to mining Bitcoin. We actually have a few things, like, I don't even want to go over it, but yes, there are things already in place for like clean energy.
Supply. This administration is trying to damage electric supply by taking out the clean energy sources that provided 95% of the new additions to the grid last year. For an industry that needs more electrons to sit quietly on its hands while an administration that it virtually controls on everything having to do with crypto and AI destroys the clean energy sources that can provide those electrons, I don't get it. That makes no sense.
but it makes that supply-demand price increase to regular Americans way, way worse. Because now you're not just adding huge new demand onto the grid, you're also pinching off the real supply that's waiting and that is out there. Listening, who is making decisions and policy.
This guy is literally dumb. It makes my ears hurt. Let's hear him get dissed real quick, and we'll wrap this up.
Plans for this industry. Think about what you're doing to regular consumers of electricity nearby. Think about why you would want to not help the clean energy industry provide you the electrons you need, and think why you would want to drive us backwards on the perilous climate path we're on, because that's what you're doing right now. Thank you.
I thank my colleague, and I want to associate myself with your important remarks as well. Senator Blackburn.
I want to associate myself with your important remarks. Okay, you're associated now, Mr. Wyden. You ready? I love this woman. This woman's hilarious. Let's just hear her talk real quick. Hold on.
Thank you, Mr. Chairman. And I would say to our panel, of course, you have no saying at all over what Senator Whitehouse just bored you with. And I appreciate that you all are here to talk about digital assets and how we're going to examine the taxation of digital assets.
She's sick of it too. She's like, look, he just bored you with this. This was not why we're here. He knows this. And I don't know why Wyden is applauding it. She's hilarious. I don't even know her name, but the stream got cut off there. So that's the end of the stream there. But there's a lot of other important things that were said. You know, if you guys want to watch the whole stream, you can. But or if you want to watch, you know, maybe directly from their website, you can watch the whole thing. But that's everything. That's really everything. So, you know, again, to just kind of ball this all up in one big thing, I think important takeaways really from this hearing is that it's very clear that regulators, that the people in charge of this stuff that are in the discussions of this, they want things to be fair. They want fair, sensible ruling when it comes to this. There's some people that don't, but whenever it comes to that final moment of judgment, you gotta think with the current administration that is very crypto friendly in place. You got to think that there's going to be some sensible regulations. I love that there were, at least from 3 of these witnesses, there was some sensible, logical regulatory standpoints to be taken from all of them, right? The majority of them. It wasn't just a harsh harping on crypto that's going to hurt the industry. And Bitcoin as a whole, I mean, we can look at it here. Hold on. Let me get this going. Bitcoin right now, guys, at 117.4K. We're robust in nature today. We're up 3%. Like, that's the biggest day we've seen to the upside since our all-time highs, guys. So this has been received positively for the markets. And again, this whole hearing, all it was just discussing about the future. They haven't decided anything officially, but there's some framework, there's some ideas laid out. And I think what I've heard in direct consensus of this hearing is that digital assets are going to have their own framework. Regulatory clarity is going to be provided. They're probably going to do away with wash trading, unfortunately, but it's going to be provided. We're going to have clarity, and it's going to be sensible and fair. It's not going to be a bunch of nonsense, red tape, BS that the average person can't understand. It's going to be stuff, seemingly, that the average person will be able to digest pretty easily. So I got nothing else. Hit the like button, subscribe. Thank you all. Take care. Bye-bye.